Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. Shares of Peloton are down 62% in the past year, but the company has a great turnaround plan if they can execute it. This is one of these companies that I can't get off my mind. You can notice here, I have a Peloton behind me. I love the product. I love what they're trying to do, but they do face a number of challenges. So today I want to look at, is this a company that's going to rebound and make a good investment long term, or should we simply stay out of it? My name is Travis Hoium. Thank you for watching Riiv Investing. Please subscribe here on YouTube and share this video with anybody you think would be interested. We'll get earnings from Peloton here in a couple of weeks, but I wanted to go through their last quarterly earnings report to talk about exactly what the strategy is for the company and what to look for as an investor. A lot of the last shareholder letter talked a lot about this turnaround plan. Now that came from coming out of the pandemic as people went back to work, were doing less working out at home. Peloton had spent a ton of money getting bikes and other products to people as quickly as possible, losing money up front, and then hoping that they would be able to make it up on the back end on the subscription basis. They added a lot of operating costs, and so when revenue dropped and margins dried up, they were left with massive losses. I will get to those losses in just a second. But I want to start with what their strategy is for executing this turnaround. Over the last 7 months since the company replaced its CEO, they've instituted a restructuring plan to variabilize the cost structure. What this means is instead of having fixed costs that are going to be there no matter how much product you sell, they want to have more variable cost. One great example of this is there's a Peloton store near me. That store is a fixed cost. They have to pay rent. They have to pay employees to be there at all times. Whether they're selling 0 bikes in a month or 100 bikes in a month, that store is a fixed cost. So they want to eliminate as many of those fixed costs as possible and go to more variable costs. Something where they're paying somebody if they sell a bike, but not paying them anything if they don't. They secured financing that will get them hopefully through this rough time. Lowered cost of last mile delivery. That again is part of those variable costs, lowering those variable costs as much as possible. Introduce the Peloton Row. This is one thing that I'm going to be keeping an eye on over the next couple of quarters. Is this creating any momentum for Peloton? Does it create any incremental subscribers, or is it just another product in the lineup? And then the hard thing here, this is what a lot of companies like Peloton are going through right now, is cost reductions in the form of eliminating 500 positions from the global team. Now, the impact of each of these things doesn't happen overnight, but what we do want to see is some progress during the quarter. I want to highlight a couple of the numbers from last quarter and talk about exactly how we should think about this company and this stock. You can see this is the big number here is connected fitness subscriptions. These are people that are actually paying for the service. 2.97 million. That was flat in the quarter, but still up 19% year over year. So that's really positive. And then they break down their revenue into 2 segments. Connected fitness product revenue, which is sales of the bike or the rowing machine or any of the other physical products that they're selling. You can see that dropped off a cliff last quarter, 204.2 million, down 59% from a year ago. But subscription revenue, which is the higher margin business, is actually up 36% to $412.3 million. That's actually a positive. Long term, you want to see that subscription number go up over time because we're probably not going to see Peloton sell its products for much of a profit at all. So if that can be a break-even business and they keep growing the subscription business, that would be a positive. Here's the margin numbers to back that up. $55.6 million loss on a gross margin perspective for the products business, which is a negative 27.2% margin. And the subscription profit was $272.8 million, 66.2% margin. So again, you want to see that subscription number go up as quickly as possible for Peloton. As long as they can get the hardware business to break even, it would be good. Here's the other challenge is operating expenses. So this is where the headcount reductions come in. That likely has not hit the income statement in its entirety. So hopefully we will see operating expenses come down from $591 million last quarter to an even lower number, because that's what's ultimately going to drive the company back to profitability. Can they get gross margin for the subscription product up to a point where it covers operating costs? The other 2 numbers to highlight here are EBITDA. This is something that I'll talk about with guidance. And then free cash flow. Free cash flow was a negative $246.3 million. Obviously, company needs to get to positive free cash flow to be sustainable long term. Now let's go to guidance. This is basically the benchmark that investors are going to be comparing against this quarter, looking for a little bit of subscription growth this year. I think that is encouraging if they can do that, even as people are going back to the office, doing more normal things in the economy. If they can keep increasing the subscription number 8 to 15% year over year, that would be really good news for them. Adjusted EBITDA, I would like to see this be a little bit better. If we're going to get a surprise from Peloton, I would think it would come in this number right here in adjusted EBITDA. But watch those two metrics closely because that is something they give guidance on. And so management should be able to execute against that. The fact that Peloton is a turnaround story, it's really hard to value this company. It's worth $3.9 billion today, but it's obviously losing money, not generating any cash flow. So what should the stock be worth? I don't have the answer for that, but I do think we are going to get some good metrics this quarter and then guidance for the next quarter to see, is this turnaround plan taking hold or not? Given the growth in subscriptions, I think this could be a really great business, but they need to get that hardware business and those operating costs under control, or the business is not going to be sustainable long term. I am a shareholder. I am obviously a bike user. So this is a company that I would like to see thrive long term, but I am not adding to it at this point until we get more positive information. Give me your thoughts on Peloton. This is obviously going to be a stock to watch for 2023. If they pull off the turnaround plan, it could be a great one for investors. Thanks for watching. Please subscribe here to Riiv Investing, and I'll see you here next time.